disculpe, pero creo que mi español no es muy bueno, entonces mi presentación es en inglés. And I'm really honored and delighted to be invited to this festival and hope that the following slides can aggregate some news and some inspiration for all of you. I have a short agenda here. I'd like to speak firstly about Global Media Group, who are we, the size that we have in Brazil and of the segments that we play. Then I'll speak a little bit about Editora Globo, which is the global publishing arm of Global Group. Brazilian market, digital opportunities, the transition that we are facing now in Brazil, and the conclusions. Well, Global Media Group is the biggest media conglomerate in South America. We play in almost all segments: broadcast TV, pay TV, internet, events, newspapers, radio network, and obviously publishing. It's a fully owned family company, and it was founded in 1925 with the newspaper in Rio de Janeiro. The group has reached in the last year 5.5 billion of total revenues, including all these companies that I just mentioned, which represented an increase of 44% over 2009. And you can see the ratio between content and advertising, which means that advertising is really relevant for our group. Since 2005, the group has received investment grade from all agencies, from Fitch, Standard & Poor's, and Moody's, and on the side you can see the logo of all companies that make part of Global Group. In terms of digital, we have a company called Globo.com, which is also the name of our news portal. Globo.com actually is a technology company and gives all the support so that the media companies, TV Globo, Editora Globo, Radio Globo, and so on, can produce the content that goes to this portal. So all the content produced by Globo is aggregated in this Globo.com, which has a penetration of 65% of the total digital audience in Brazil. This means 29 million unique visitors per month. And Editora Globo content is fully concentrated in this portal. Well, let's speak a little bit about Editora Globo. We are the publishing division of Global Media Group, the second largest publishing company in Brazil. And besides weekly, monthly magazines, we also carry some books through Global Livros. Last year, we created a joint venture with Condé Nast in Brazil. Until last year, there were already two titles from Condé Nast, Vogue and Casa Vogue. And these two titles came to this new joint venture, which is a subsidiary of Editora Globo, and this year we launched with GQ. This company was created to launch all Condé Nast titles that we feel that fit in Brazilian market. All the brands that we have are there. Most of them, the origin of the brand is print. All of the print brands, they have obviously the digital side, not only tablets but the websites and app applications for mobile. And we have some new brands that are pure digital. The biggest example would be Mundo do Sítio, which is kids and social media games, which is a complete digital brand focused on kids between 6 and 10 years old. It's a sort of social network and game website. So our brands across all platforms, we contemplate 17 magazines, 18 websites, apps, Android or iOS, magazines for tablets, and events, which is something that is really increasing. And it's a platform that completes the 360 degrees view of our media solutions. Our audience in print is, considering the main research that we have in Brazil, with the biggest 9 cities, is 3.4 million, and when we extrapolate this number to the whole country, it means 8.8 million readers per month, which means 22% of market share. The audience profile is mainly females and mainly class AB, which means we are more focused in higher social class. With respect to the websites, it's slightly different. We have more men than women. The brands are the same, which means that men they want to read what is written in some women's magazine, but it's easier to access through the internet rather than buying a magazine or subscribing it. And the size of the audience is similar to it's 7.7 million unique visitors and 120 million, almost 120 million page views per month. The books division, we have 1,000 titles, which includes a lot of international collections like Jamie Oliver or Lonely Planet. Talking about our size in the advertising market, we are going to reach this year 15% of the magazine's slice of the pie in the advertising market in Brazil. The total market is expected to reach 2 billion reais, which is around 1.2 million dollars. And in terms of digital, since we started to have our digital arm, we are 1.5% of the whole market that report the figures to the Price Waterhouse. Our company, so it's going to reach $334 million revenues this year, and since 2009, advertising plays a more important role than content in the breakdown of our revenues. Brazilian market. So, first of all, it's important to leave clear how Brazilian population is, how is the Brazilian population breakdown through socio-economic level classes. So Class AB represents 38% of total population. Class C, which is emerging and increasing a lot over the last years, represents 49%, and Class D, 13%. The affinity between the social classes and the platforms and the media is as described in this chart. I mean, Open TV, Broadcast TV, it's almost the same as the Brazilian population, has a huge reach, and the affinity among the classes is almost the same. Then you have newspaper and magazines with more affinity to social class AB. It's a paid media and makes totally sense. And internet and pay TV still with the biggest rates of affinity between the media and class AB, but with a huge increase of class C over the last year. I mean, the increased rate of class C for internet and pay TV over the last 4 years is 4 times bigger than the increase in class AB, which means that in a couple of years we'll have probably internet and pay TV with more class C than class A and B. The readership penetration by the socio-economic level in Brazil, as Elias mentioned here, the publishing, the print industry has been decreasing over the last years, and it's not different in Brazil. When we speak about readership, when we speak about circulation, we'll see later that it's not almost the same. But in terms of readership, we had in the beginning of last decade 56% of the population reading magazines, and in class A and B, 75% of the population, and this decreased over the years, and it's a sort of stabilization since 2009 in 39%. But please note that the decrease between classes A and B is much lower than the other classes. I mean, in class AB we have decreased, but much less than class C and class D and E. Just to be sure that everyone is at the same page, I have the description of Brazil criteria for socio-economic level. I mean, class A and B, you have all the figures there which explain in terms of household money, how much each class is making per month. We saw that in terms of readership we are decreasing, but decreasing less in classes A and B. When we speak about circulation, it's on the opposite way. I mean, since 2006, circulation has been increasing in Brazil in both channels, news plans and subscriptions. And over the last 3 years, a 4% increase, which is really relevant. And interesting thing to note here is that the increase in circulation happens not only in the most popular segments, like popular women magazines or teenager, but also in some high-end segments like fashion magazines. We carry Vogue and Marie Claire in Brazil, and house and decoration magazine, car magazine. magazines as well. So we have seen a consistent growth among almost all segments. I would say that the only segment that is really struggling in terms of circulation is News Weekly, which is more close to what the newspaper do. But all the other segmented issues, they have been experiencing an increase in circulation over the last years. We have been discussing a lot, and we have been discussing together with Gabriel, because obviously this is something that has impacted our business. How can circulation increase and readership decrease? There are some hypotheses that are being discussed, and the first one is the decrease of family size. I mean, people have less children today, live alone for more time, and several other issues, and how magazines are being shared and discarded, which could explain too if people share less the magazine, if they keep the magazine in their own houses and they live alone, probably the number of readers per magazine could decrease. But I mean, it's a big discussion in the country. We are not comfortable so far between this lack of sense between circulation and readership. But I would like to share with you some hypotheses that we are discussing. Well, the Brazilian advertising market, the print, first of all, is currently 7.5% of the pie. At the beginning of last decade, it was 11%. It decreased over the years, but it's still growing more than inflation. We are losing ground, 7.5, but still growing and growing more than inflation. So we have an average inflation of 5.7% during this year, from 2005 to 2011, and the magazine segment increased 6.6. So it's still increasing, it's still having an actual increase over the last years. In Brazil, as some of you might know, there's a huge concentration in broadcast TV, which carries almost 63% of advertising market share, despite all the internet growth. And you have here the internet pie in 4.6. And I'll explain with more details these figures in the following charts, but there's still a huge concentration in broadcast TV. On the other hand, internet, I think it has the biggest increase rate over the last years. I mean, the average increase was 32.5%, and it will reach this year 5.1%. Since 2009, internet already surpassed pay TV, and it's only behind magazines, newspapers, and broadcast TV. It is important to note that these figures that are audited by Pricewaterhouse in Brazil, they does not include Google and Yahoo. They don't report, and other search engine companies. They do not report their figures, which means that they are sort of incomplete. And I'm going to explain later with our estimates of Google and Yahoo how the pie would be. Before we do that, the internet revenue with this chart. The internet revenue with Google and Yahoo, the 5% that we saw in the previous chart will become 10%. Our estimate is that Google and Yahoo together and other smaller search engine companies, they combined have the same size of the rest of the market that is reporting the figures to Pricewaterhouse. Which, with these figures, would mean that internet will be already just behind newspapers and broadcast TV in Brazil, surpassing magazines. And one important thing to note here is that the advertising revenue disclosure, including the search engines and the non-premium displays, I mean the click and so on, represent the biggest part of the advertising internet segment in Brazil. We are actually competing for the 31 to 28% part of the market. This is where media companies are actually fighting for the money. All the rest, they are concentrated with non-media companies, and this is not our business, which means that the challenge is even bigger. So, the publishers' internet market share, we had an estimation about our competitors, and we add to our actual figures, is about 8% from the total digital advertising market if we don't include Google and Yahoo. On the other hand, if we include them, since the market will double, including them, according again to our estimates, this market share will go to 4.2. So we are increasing, we're about to reach 10% without Google and Yahoo, but when we put the whole digital business in the pie, it goes down to 4%. So considering all this data, what are the digital opportunities that I foresee for our company in Brazil? First of all, we have a good share of audience. We have been reaching between 16 or 17% of the total internet audience in Brazil over the last 12 months. Coming again with the affinity index between the medias and social class, on the left side you have the total population, the reach of each media over the total population. So broadcast TV with 86, 87%, and magazine dropping from 56 to 39, and internet increasing, the biggest increase from 11 to 36%. On the other side of the chart, considering only people with access to the internet, how do they deal with the other medias? So, considering all people that has internet access, it means that 85% they watch TV on a daily basis. 53% read magazines on a daily basis. It was 80% at the beginning of the decade. And the pink line, the internet, means that the number of people that has internet access and uses the internet access on a daily basis. It's 70%, it's not 100%. Not everyone that has internet access every day. If we compare this with newspapers, which is the other part of the print industry, we will see that the mixed use of newspaper and internet is stable at 35%, while the unique use of newspaper has been decreasing, and from 28 to 13%, people are reading less newspaper, while the unique internet access has increased from 17 to 34. This is a trend for all segments. My point here is that the stabilization of the mixed usage with magazines is much higher than newspapers. When we go to magazines, we have 51% of the population that has access to internet having a mixed use. They read magazines and they access internet. While the unique usage of magazines was really low since the beginning, it was only 8% 5 years ago, which means that decreasing there makes no big difference in our business. So we still believe that magazines and digital together can have a strong combination. There are some truths that we have to rely on to defend our business, that analog journalism does not fit in the internet, and magazine must be a selected choice among the amount of information available today. Therefore, we believe digital has obviously a great potential for brand expansion and reach through multi-platforms. And we also believe in integration. Our origin is publishing the print business. We have developed the digital arm, and we always work with integration in both sides, advertising and editorial. So we have here some examples, like the coverage of Carnival in Brazil, on which the same team was covering for the internet and had spikes in audience, and then the same team produced the content that was printed in the weekly magazine, Celebrities Weekly magazine that we have there, and we also had recording sales in newsstands. When it comes to digital, there are two different approaches. We have some paid content, which is basically the content that we produce for print, and then they transform it into digital tablets. It is still paid, and we believe that this content, there's still room to charge for it, because it's different from the content that we produce for internet, which is more less deep and more quick and fast, and more movies and podcasts and so on. And all of our websites, they are based on free content advertising. We still see opportunity to grow. E-commerce is something that has been discussed a lot since we are focused in segmented areas. I mean, it makes sense to do e-commerce associated with the subject that we are treating in the magazine or in the website. Ultra-segmented content would be, and I have an example of agribusiness here. We are the biggest player in agribusiness content in Brazil, and it may be an opportunity to have a paywall when the content is ultra-segmented. Tailor-made projects, this is a good example with Caixa Econômica Federal. It was mentioned here before at Rai's presentation as a bank that is focused in real estate financing, and they used our entrepreneurship, which is also the biggest in the country, website to do a shift in their image and show that they could also provide finance to entrepreneurs that wanted to invest and to start up their own business. And segmented channels, this is our women's aggregator channel. Tablets, I mean, it's an opportunity to grow. It's still new. People put a lot of hope on it, and I think we have to give time and wait a little bit. It is clear now that through newsstands it's impossible to reach relevant audience, and that subscription is the path for the growth. But subscriptions, as all of you might know, has been a great discussion between us and all media companies and the tablet producers. Mobile applications, we have a lot of mobile applications. They are also free, and as the websites based on advertising opportunities. Well, to conclude, I would say that Brazil is not yet a mature market, both in newsstand and subscription, in the print industry. And we have seen that circulation has grown over the last years. This morning, the luxury panel discussed how Latin America, especially Brazilian, need more education, need more information, and we are facing that with international titles that we are bringing to the country, like GQ. It's the first lifestyle magazine in Brazil for men. And despite the loss of readership, we really believe that there's still space to grow in circulation and still grow in advertising at least more than inflation. And in terms of digital, to conclude, tablet, it's an opportunity, but we have to solve this subscription issue. I mean, I don't believe that we will build relevant audiences in tablet just with single copies. We need the subscription addressed with all the tablet producers, with Samsung, Apple, Motorola, and so on. And obviously, the biggest challenge for all media companies is to continue to grow audience, to shift all the brand awareness and all the relevance that we have in the print industry to the digital and monetize this in terms of advertising. Thank you very much. I mean, I was beyond my time.
Bueno, temos um aplauso para